Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, coming to you live from the Verified Investing Studios. So we have tons to talk about. Jobs report out, markets ripping higher. Part of that is Apple. Part of that is the weaker jobs report. I'm going to cover all the levels, all the charts, commodities, crypto, stocks, you name it. We're going to get all into it. So without further delay, let's get started. All right into the action we go. First thing we're going to do is go over our morning market blast right up here, guys. This is where I post all the key stuff. Click on that baby right there, and we're going to go down to the data. So this is what I want to do first. We go to the data, we look at the data, and then we go to the charts. So we got to know the data just so we can interpret the charts and see if it meshes. But first off, non-farm payrolls coming in at 175,000. That was far less than expected. Expected was 238,000. Last month, 315,000. Now, last month before today was 303,000. They revised this number up. So again, a little bit of a revision up. But the bottom line is here, we had 238 expected, 175 jobs created. So that's showing a weaker number. Next up, unemployment report was expected to be 3.8%. It came in at 3.9%, so an uptick in unemployment, okay? The one that I pay attention to, folks, right here, and this is the one I've been telling you. I've been saying the U6 unemployment report, which is people that are underemployed, people that want full-time but can only get part-time jobs. Take a look at this. It continues to go higher, all right? Last month was 7.3%. This month, 7.4%. If you look at the trend, and you can actually find this on the website, on Verified Investing, if you scroll down to economic charts, I actually did a chart of this showing over the last 6-12 months, the U6 and how it's been consistently grinding higher. And if you look at every recession we have had, except maybe the black swan recession of COVID, you have a scenario where this is always what happens prior to a recession. People get cut from full-time down to part-time before they get laid off, right? In general, if you think about how bosses work, right, they don't want to just fire someone because they're like, oh my goodness, what if the economy gets better and I need that person back? Let me cut them down to part-time, and then I can always bring them back to full-time. Once they see their business isn't recovering, they actually have to lay those people off. Participation rate. How many people are participating? That stayed the same at 62.7%. Private non-farm payrolls, 167,000 versus 181,000 expected. That again is a weaker number. And this is a key one. Average hourly earnings came in at 0.2% versus 0.3% expected. Now again, average hourly earnings, remember, the idea is that we have inflation. And this is where things get a little kind of sketchy for me in terms of being not the greatest, is that if you have inflation still, let's say at 3% or 3.5%, right around 3.5% right now, and people are starting to make less, then that means inflation is moving up like this, and pay is only moving up very slowly and not keeping track of inflation. And that could be a very negative if inflation doesn't come down. Okay, finally, guys, a couple things. Apple financial engineering at its finest here, and I'm dead serious on this. They had less revenue than they did last year. Basically their numbers were not the greatest. It beat the low bar of expectations, such a low bar of expectations, but they decided to do a $110 billion share buyback. Okay, so remember how buybacks work, guys. Let me draw this on the board so I can illustrate, because this is honestly, financial engineering drives me nuts, because who does it benefit? It benefits the rich, the mega rich. If you're Warren Buffett and you're sitting on your massive position on Apple, you love high dividends and you love share buybacks. Share buybacks, the company takes $110 billion, they buy back all of those shares, and they basically just go poof, no more shares. We're going to disintegrate them into the company, absorb them into the company. And then what ends up happening is it artificially makes, because there's less remaining shares, when they earn $100 or whatever they earn, it makes the less shares get more earnings per share, and it artificially shows a better result. It also makes it so the CEOs of these companies, their stock continues to go up because they're doing this financial engineering, and therefore their bonuses go up. So they make more money, even if the company's making less revenue. revenue. They're just looking better and better because their stock price goes up, and that's really what they're rewarded on. Let's be honest. A CEO is not rewarded because, oh, we did better with revenue or this. It's what is your stock price done? You could do better with revenue. If your stock is down 50%, trust me, the board's not going to be like, oh, let's give this guy a $20 million pay increase. So understand the difference here between financial engineering. And again, just to reiterate what this is if you have 10 shares, and again, so 10 shares and you're making $10 a share, then that's $1 per share. If you buy back half of those shares, the company buys back, and now you only have 5 shares, you now artificially, you're still making the same amount of profit per share, but you're now making $2 per share instead of $1 prior. So by artificially engineering it, you've basically doubled your earnings for your stock, even though you have not made any more money. One of the shadiest things, and I know the government's kind of looking at this and saying, is this good? And the reason, by the way, I say this impacts the rich the most and gives them the most bonus is because smaller people, like if you're in the mid to lower income, the lower income probably doesn't hold any Apple stock. The middle income, maybe they hold some in their 401k, but it's probably some minimal amounts. The rich are the ones that have, like, Warren Buffett, Berkshire Hathaway owning massive amounts of this. They're the ones that benefit. Let's just be honest. This is what happens. Okay, so in any case, that's a good one. Amgen soars on the weight loss drug news. So again, Amgen was up massively. I haven't seen Amgen up like this in a long, long time, and I've been around for a long, long time. Amgen basically said, hey, we have a new weight loss drug. Oh my goodness, this is great. Think about this comparison. Weight loss drugs are the equivalent of AI. I'm just telling you straight up. The hype behind a weight loss drug, like literally, if a company comes out and says, we have a weight loss drug, they could be like the crappiest company in the world, their stock will go up 2 times. All right, so if you're an AI, if you're a semiconductor company and you're like, hey, we have a new AI chip, goes up 2 times. It's the same sort of mentality. Investors treat it the same way. It's the exciting new thing, and eventually, you know what happens? Eli Lilly's down today. Why is Eli Lilly down today? Competition, guys. And this is why I've said the AI stocks are going to come back down over time. Look at Tesla in 2021. I've used that as an example. All of this is going to come to pass. Okay, let's get into some chart action here real quick. We'll do our drawing for a year of NordVPN in just a second. But let's start out with the U.S. dollar. So we had the jobs report, and right away the dollar fell and yields fell. Because, again, weaker data, the market is viewing it, honestly, the market's viewing it as a Goldilocks scenario. It's weak, but the jobs number wasn't so weak. It wasn't like we were losing jobs. We just only gained 175,000. So that's kind of like, okay, we're still growing, we're still adding jobs, but it's not so weak that, oh my gosh, we're going into a recession. So this was a Goldilocks number. The dollar fell, yields fell. You can see right here on the daily chart, we were kind of chopping in a bullish pattern. This bullish pattern has now failed, guys. I mean, it's failed. This now tells me the probabilities are now favoring a move back to this level right here on the US dollar. So it's not a big move back down, but that will be your next major technical support. If we go to the 10-year yield, what have I been telling you about the 10-year yield and the channel? It was an upsloping channel. We were at the high end of the channel. Probabilities dictated we would move to the downside. What are we doing? I mean, look at this. This is just the beauty of technical analysis, guys. It's nothing complex. I literally just drew a parallel. That's it. And all of a sudden, I have information that's useful to me that gives me probabilities, right? And so what we saw, and I was looking at history, I was like, oh, well, every time it's up here, it comes down here. And then it goes up here, oh, it comes back down here. And then it's down here, and it goes up here. And then it pulled back and did a little double tap. Remember I talked about the double tap? Here was a double tap here. Well, here was a double tap. And then what happened after the double tap? We went to the highs. Here's the double tap. We should go to the lows right here. And look at how close we are. And we were above 1.7%, and I said this. I said, guys, look for us to move down to about 4.4%. The low today, 4.455% on the 10-year. So again, hasn't gotten quite to my ultimate target, but man, oh man, what a pullback in yields. There's a reason why smart money stocks and ETF members are in TLT from up in this range, and we are now in the money. Remember, TLT is the ETF that goes inverse to yields. Basically, if yields go up, okay, TLT goes down. If yields go down like this, TLT goes up. So good job there for members of Smart Money Stocks and ETFs. I love that stuff. All right, going to the S&P, here's your pop. Look at that pop, guys. So we were already trading higher on the back of Apple earnings, and then all of a sudden this comes out and kaboom to the upside. Now, this is where things get interesting. If we flip back to our daily chart, first of all, this is what's going on. And I want to be clear. To me, this still doesn't tell us we're going back to all-time highs. It doesn't. What it tells me is that we now have a channel developing, just like on the 10-year yield. And if we look at this, right, so we were down here, we went up here, we then came down here. So we're probably going up here. And look at this level. Remember this level, this wide range reversal candle? That is now a level of dual resistance. So we should top out right here. The level is right around 514, 513 to 514. That should be your significant level of resistance. That's a level where, to be honest, I've been playing some long-dated put options on the Qs, not the spiders, but the Qs, and I keep on taking my money every time we dip and making a nice chunk of change. I'll probably be looking to get back into those puts as well when we get up into this range. Just flipping back to the intraday chart, where are we trading? 510 and change. So we're only about $3 away from that upside target on the SPY. QQQ, same thing, monster bounce. There you have it. If we go to our daily chart of the Qs, same thing. We're kind of coming up right to this 433 level. If 433 gets taken out, I'm looking at the low end of this reversal candle, which is around 435. But this zone right here should be significant resistance. Same thing, we could draw a general parallel channel in there as well, and that will give me a resistance level to base my decisions off of. And I think this is important, folks. What you see me doing every single day is not thinking, feeling, my gut, whatever it is. It's literally saying, okay, what are the charts showing me? And then making the charts tell me. I don't tell the charts. And by the way, I've tried that before, and I always lose. I literally let the charts tell me what is likely to happen. And I look for multiple factors. Multiple factors is everything. You could have a moving average. Okay, moving average, if price comes into a moving average, let's say the 50 moving average, there's probably a 55% chance that you get a bounce off of that. 55% doesn't cut it for me. I'd rather go to the casino with almost 50-50 odds at blackjack if I follow the book, get free drinks, hang out with my friends, do all the fun things. That's fine. If I'm trading, I want 60, 70, 75% odds, maybe even 80% odds. And that's where the factors come in. You have to start looking at the factors. All right, next up, guys, let's look at Amgen. Look at this move on Amgen. Incredible move, trading at 312 and change. I do want to just go over a couple levels I'm watching today. So again, if I zoom out on this, there's two levels. There's a double top and a longer-term trend line here. And again, this would be a very significant resistance. Notice this longer-term trend line. Remember the two-factor idea, right? So we have this trend line right to this high. We have a flat double top here, and then we have this one just above. The level here is, I think, around 330. I think it's around 334 right there. It's approximate, give or take. But basically above 330, this starts to run into major, major resistance per the chart. Next up, if we go to Square, big move too, guys. Now, this stock's been beaten down from where it was a couple years ago. Beautiful move up today. If we flip over to the daily chart, let's take a look. The daily chart, the only level I have here is a down-sloping trend line here of resistance. If I zoom out, it's actually a pretty cool chart, right? In fact, let me zoom in a little bit more so we can see it a little closer. There we go. So we have this low here, through here, and through almost here and here and here. And that's right around, I think it's right around $83 to $84. So again, we're still quite a ways away, but that would be the first big test. Now, by the way, eventually, if Square can, and I keep on calling it Square because that's what it used to be called. It's like when I talk about Google, it's really technically Alphabet, but to me, it's always going to be Google. But eventually, if it gets through here, you get a big breakout, but you would assume there would still be a check back after getting into this level. All right, next up, Apple, guys. We got to touch on Apple here. What a breakout to the upside here, trading at 85 and change. Couple levels I'm going to be watching, and you can see yesterday I annotated this out. We even talked about it in Trading the Close. I said I have no good bias in here, but if it gets above this line, it's a breakout. Well, it's a breakout, all right. And there's a gap fill right here at 187, and then a little pivot at around 190 to 191. Those are my only levels that I would consider day trading today on the short side, but they should be good resistance. And net is one that's down. Big drop on net. This is Cloudflare cybersecurity play. And if we flip over to the daily chart, the level here, you can see two converging trend lines of support right in this basically $72 to $70 level. That's where I would look for it. It's still got a ways to go, but this thing could easily flush during market hours to get into that level. All right, what I want to do now, guys, we're going to do a quick drawing for a prize. We know that we had the NordVPN 1 year. As always, guys, by the way, even though I'm asking you guys just to share on here, I still read the comments, and the comments are so freaking amazing. Like, seriously, like the kindness, the making me understand that I'm helping you guys and helping you learn. It really, honestly, is pretty darn cool. I really hope you guys continue to share, and that's kind of what our goal is, to really expand our viewership, because I think there's a lot of people out there that would benefit from the honesty and the data-driven analysis versus what is spewed out on social media or in other mainstream media outlets. But either way, guys, let's do this drawing. My way is to just give you guys stuff, give you guys prizes. There's not much else I can do here. Just give you guys stuff and for tuning in, and I hope that we can continue to do that. So the winner for NordVPN, Steve GN4HK. Welcome. Congratulations right there. I'll reach out to Lawton at verifiedinvesting.com. He'll get you verified that you shared the video on one of your socials, and he'll get you that information for NordVPN. All right, let's go right over here. Let's spin the wheel. Let's spin the magic wheel of appreciation to see what we win on Monday. Let's see. There you go. That's pretty cool, guys. $300 credit to anything on VI. $300 credit to anything on VI. So verified investing, you can go scout it out, whatever you would want. Do you want a service? You could have a couple months for free. You could put it towards quarterly. We have quarterly options on there. Whatever you want, but you got $300 credit for whoever wins on Monday. Congratulations. And again, to enter, don't forget, couple things. You must either follow Verified Investing on YouTube or on Twitter, and you must share this stream on one of your socials. All right, go help your friends. You know, you're actually doing a good deed, because I truly believe that everything I bring to the table here is at least for me, the goal is to make things better for retail investors, to fight for retail investors, because a lot of this stuff that I talk about, you're not going to find it anywhere, seriously. The big boys do not want you to know a lot of this stuff. All right, over here we go. Let's go into Bitcoin. Bitcoin is getting a pop, right? So we are seeing Bitcoin getting a bounce. This is normal because, frankly, the stock market's going up. So when the stock market goes up, it's risk on. When Apple's going up, people are feeling great. If they're putting money into stocks and rallying markets, Bitcoin's going to get a bounce. Now, this is the kicker. Watch this level like a hawk right here. See, remember this former trend line I kept on telling you guys about? This is the level. In fact, I want to make it even simpler. We can put this channel back in at another time, but really, at this point, I like keeping it as simple as possible for you. This is it. So what you're watching for is we need to close back above this level, which I think is right around, let's see, right around 61,500. So we need to close above 61,500 and then confirm. If we confirm, now you got some big potential upside, but you got to get that first. As of now, this is confirmed resistance. Think about this like a wall this size. This is confirmed resistance. It is going to be resistance. Not to say it can't be broken, but the bulls have some buying to do to get this above this if they want it to really have legs. So watch that level like a hawk, guys. That is what you're going to be seeing. In terms of Ethereum, I have to say, super happy I covered my short with members at Smart Money Crypto. It came right in here. I said to myself, hey, listen, use the same rules. Like if this was anything else, doesn't matter what it is. If it's coming into dual trend lines of there, and you can see the two trend lines converging right there, I said do the smart thing, take your money off on the short trade, and then you can always maybe re-enter. Well, guess what? It's now up 300, $300 or so, 200 to $300 since we got out of that trade. And for all I know, it could go up to this high-end range. There's nothing that it has to confirm above, like Bitcoin. This thing could just go right back to about 3,400. Now, 3,400 will be confirmed resistance, but right now, that's still about 300 and change away. Looking at gold, guys, gold's kind of interesting here. So most people, and including myself, would say, all right, the dollar is down big, so gold should be up big. It's not. Barely moving on the day. Why? Because gold is also a risk-on, risk-off thing. And when people get scared in the stock market, people go to gold. Right now, today, better jobs numbers, markets love it. Apple earnings, market love it. Investors are taking money away from gold and putting it into the stock market, and that's taking away from the potential pop from a weaker dollar. So that's just what it is. Now, in all fairness, I've been bearish on gold in the short term, even though I'm hugely bullish long term, because I still think it has to retrace, and this might be the beginning of that move. So we had the topping tail, the bear flag, and now we're trying to break down here. But really, again, I still think we probably have to test the 2,200 level. Next up on silver. Silver drove me nuts yesterday. So yesterday, you guys know I said between 26 and 25.50 is your zone to buy. We got to literally 26 like 02, and then it popped back up. I'm like, all right, how many people were front running me? Thanks, guys. No, it's all right, no big deal. But the point is, again, this is still my zone. I'm a disciplined trader. If I missed it, I missed it. So be it. If it wants to come back in, I will be waiting patiently. I have my zones in here where I have my orders. If it comes in there, I will take it. Otherwise, there's always another trade around the corner. I mean, how many trades do we go over in these alone? I mean, huge. Natural gas, guys, real quick here. Natural gas is going in the right direction. Giggity, giggity. All right. Anyways, we have this move to the upside here. I love how we've had these big pullbacks, and they keep on getting bought up. So that's a positive. It even gives me hope that, and listen, you can't assume anything. Markets are markets, charts are charts. We know we have resistance right here. But the way this is acting, it almost makes me think it might even push through, at least pierce this level. Again, for 220 to 225 is the zone. We're trading at 213 right now. Can we do it? We've been in a nice upsloping kind of channel, if you will, right here. Can we push up and pop through this level? Speaking of popping through in the commodity service, Smart Money Commodities, I got to show you this because this is just case in point. Like, again, one of the greatest things about the services I run, guys, holy cow, look at this, it's even working even better, is that I literally find these trades within the commodities, within the crypto markets, and within the stock and ETF markets. This was one we took in the commodity service, and we are just rocking it now. Look at the pattern. Cup, handle, or bull flag below resistance, right? Support here, broke down, resistance, resistance, resistance. Broke above, confirmed. Here's your confirming candle. Bull flag. What do you think is going to happen? Boom, to the upside. So yesterday, by the way, we just closed out a trade in the Smart Money Commodities for a nice gain on LIT, lithium, the lithium ETF. But this is another one we're holding because the chart is just, and this is the beauty of it. You know, I don't consider myself a huge expert on commodities. I don't consider myself a huge expert on crypto. Heck, I could have a Forex service. I don't want another service, by the way. But the point is that charts are charts. Bull flags are bull flags. Support is support. You can trade anything when you learn charts. You can trade freaking anything. And that's why, honestly, the Winning Trader series is so amazing. Again, I'm hoping to run a sale later this year that will just be blockbuster for you guys. Because, honestly, the more I can give back, I got to charge for it because, honestly, it costs a lot of money to make it and everything like that. But we will make it so it is affordable for you guys, absolutely, in the not-too-distant future. All right, on that note, I got to get trading because today's going to be a good day. Oh, that's not a good thing right there. But on that note, one more time, let's do this. All right, take care. I'll talk to you later, guys.